Alright, what is going on, guys? Welcome back to another video, and in this video we're going to be talking about some of the trades that I've been taking and kind of the action that we're seeing here today on Dow Jones, on Nasdaq 100. It's something that it's pretty big because as we know that the markets have been making all-time highs the last couple of months, and now in September we saw an initial drop, which I traded very beautifully in September toward the short side, and now we made another top. Coming from September, October to November, and now coming to like the last week of, I would say, this November, and now December 1st right now, we're seeing markets starting to spin off. Markets are trying to decide where to go. And I actually call this drop, like if you guys are with me in Scalping University, I was calling the drops on September. Literally, I used my collapsing EMA system and call the top. And if you guys know that, you guys would have seen that in my group chat. And also with the Dow Jones 30 coming in with a new top right now, I knew that something was most likely going to happen because of how basically the whole market with inflation just being very high. All the stocks are just very, very overpriced, and it doesn't make logical sense. And obviously, even though with this super, the Federal Reserve like printing money like it's easy or whatever, and just having all these insane amounts of stuff happening with GameStop, with AMC, people think, oh, the markets are always going to go up. But, as day traders, as traders, we know that markets tend to come down and recorrect themselves. And for me, I just look at patterns. I look at what price is telling me, and you can see that very clearly with experience where, the candles are becoming more dense, less volume are coming up in the top. You're seeing just choppiness coming on the top as well with, different kinds of divergence, which is divergence is telling you exactly, okay, so it may look like that price action may want to come lower. And so that's what I was expecting. And coming into like around the end of this year, I was expecting kind of another drop, another recorrection. But this time, since I am a little bit more pessimistic, I was actually planning on seeing if we could find a bigger correction than we saw in September, possibly a crash. Now, with this new strain coming out, so if you guys don't know what's happening right now around the world, we had on Friday, Omicron is a new strain. It's a strange name because it sounds like the end of the world kind of virus or whatever. But coming up here, you could see that you see that right over here. What to watch today, Dow futures. So with this Omicron variant, we saw that it emerged from South Africa. And, it tends, scientists say that it tends to be more deadly, or it looks like it's more deadly because of the mutations coming into the protein genome. And so with all this kind of fears, again, of another possible lockdown on Friday, I think on the weekend, we had the United States basically lock all planes from South Africa. And it's so amazing to see the chronological of events. If you really are a day trader, you should look at the news very frequently and see, okay, these are the chronological steps that's going on, because markets are all the way up top, all the way in the top right now, right? It could recorrect any minute. It just happens to just have any negative news event and it will collapse. If you guys remember last January, whenever the markets were all-time highs, I knew something was going to happen as well. And I wasn't even day trading very like big capital at that moment. And, it just happened with the COVID variant coming from China. Things started to get worse and worse and worse and worse with the lockdowns and everything like that. And you guys saw that crash happening. Well, if you guys look at history from last year, the same things are happening, chronological things are happening right now. Now, I don't think we're going to see a big amount of a crash that we saw in, I would say, in February, March, and April of last year. But we are seeing, some kind of history repeating itself with these events happening with this Omicron variant. Like I said, I'm always pessimistic. And so I think that this variant could be very bad. It could be very bad for the world because of the mutations. And we all know as this virus spreads out to millions of people, it has a high tendency of mutating. And we all knew that was going to be a fact. Whenever the virus spreads and spreads and spreads, it's going to mutate. you know, it's just a fact. Virus mutates whenever, you know, they're doing in huge quantities. It could mutate and basically be non-effective against vaccines. It could be more deadly. It could be easily more spreadable toward everything. So it's something. So it's something that's a little bit dangerous, right? So everyone is just being very fearful right now. Now, the smart investors will know that, you know, they would have sold at the top because they know it was highly overvalued. The smart investors would have sold at the top. I guess the more greedy investors would just have hold on, hoping that it will continue going up. And, you know, as it starts to fall down, investors are getting a little bit fearful. So as day traders, we take advantage of whenever markets are falling, right? We take advantage of whenever people are fearful. That's just day trading right there. You know, whenever people lose money for investing on these long-term stocks, we usually make money on the short side, right? In both sides, actually, both directions, you can make money both long and short. You know, but for right now, you can see that on Dow Jones, how we've been seeing a very nice, decent drop. So it started in around November, right? We're seeing kind of, you know, price action, Dow Jones 30 making lower highs, lower highs, lower highs. And you can see how well it respects the 50 EMA right over here very nicely, right? Respects it right there, right there, right there, right there, right there. So, you know, now we're coming below the 4-hour 800 EMA, and I did expect some kind of bounce off that level, which initially we did see a bounce off that level, came up to the 21 EMA and then came back down. And throughout the last 2 days, we've seen price action try to see what it wanted to do. Today, we did see kind of an update during the market open, and eventually came all the way up to the top toward that 21 EMA and just basically collapsed. And that's whenever more news events came out. Yesterday, we had Federal Reserve Powell being just coming out with negative news, and then today we had a little bit more negative news coming in with the variant as well. So all this fear is just, you know, panicking people, right? It's panicking investors. And as day traders, we need to take advantage of that, because as day traders, whenever investors are very scared, whenever investors are very fearful, we should be actually greedy. And that's actually where I make most of my money whenever markets are falling, because usually when the markets are falling, you know, I can make a lot more money to a short side very quickly because it comes down very fast, and as well as there's more opportunities because there's more volatility. You see the VIX today, VIX right over here, the VIX was up 14%, right? So that's you know, not insane, but decent, right? You can see how this VIX kind of volume just came up for today. We saw a little small volatility, but, you know, today it literally just went through ADR and with these two big candles right over here. So you could see that right now markets are a little bit more pessimistic for sure, 100%. And so I was actually waiting to be, you know, hitting the gas pedal very slowly, because I want to see if the markets are actually going to fall and not just kind of stutter at a level and then eventually fall. Because usually whenever, you know, I, as a scalper like myself, whenever it's stuttering at a level, you can get chopped out sometimes. So I'm just trying to be very careful if I'm trying to step up the gas pedal. So right over here on the Dow Jones on the 4-hour chart, you can see that, you know, price action has been making lower highs in the last couple of days. And you guys will know that with our new system that came out for my Scalping University members, which is called the Collapsing EMA Entry, it works extremely well with, you know, just whenever markets are falling. And these are distinctive patterns that happen almost every single market open, where it shoots back up, comes toward a level, gives you a bunch of confluences, and then you can short it down to the downside. So let me go ahead and show you guys my trade for today. I only took one trade. I was actually very busy throughout the whole day, and I actually regretted a lot, you know, missing out on some moves, because today was a very nice short opportunity later on in the afternoon, but unfortunately I was away from the charts at that time. But anyways, coming until today, so what did we have here? So we saw that yesterday we saw price action close below the low of day right over here. So yesterday we saw price action came down, came back up to our 21 EMA on the 1-hour chart, and basically eventually came below here toward the low of day, closed between the low of day. And from the turnover of the day, we saw price action come back up and came toward one of my favorite exponential moving averages, which is the 50 EMA. So the 1-hour and 4-hour 50 EMAs are extremely powerful and are key levels that I look for whenever I'm looking for short trades, right? So from right over here, you can see how price action came toward that level initially on the market open. So this was during the market, close to the market open. The market open actually right over here, and I like taking trades off the market open. Why is that? Because I have a proven statistical edge of these very distinct and very repeatable patterns that happen at the market open during volatility periods, where I can make a lot of money, and I could. I wouldn't say predict, but I can give myself a fairly good probability of winning on the trade based on momentum, right? And that's just basically through experience and trading, these instruments, every single day. So from the Dow Jones on the 1 hour chart, we were fairly bearish on the TDI and MACD seasons. And one of the things that I do want to note is if you put on the Fibonacci's, so putting the high right over here from this, lower high right over here, and then putting the low of the Fibonacci point toward this kind of lower low point right over here, right? If you put that, you can see that this Fibonacci level is quite powerful, right? It hit around 62%, until eventually coming back below. Now, I don't use Fibonacci levels as an indication to get into a trade. I use it as confluence, always as confluence, because Fibonacci is a retail tool, but it's also a good tool to use to kind of indicate where a reversal might happen. So at that point, there was a Fibonacci confluence. It was bouncing from that 50 EMA as well. And so I like that opportunity short at that period of time. And you could see here that at this critical point on price action, we just put the screen a little bit higher right over here, we saw that price action was, making kind of higher lows right over here, higher highs. Eventually we had our divergence point right over here, which is a point where we look at, because the 50 EMA on the 1 hour chart is right over here at this point. So whenever you see divergence forming right there, and then when you also see, if you look at the 1 hour chart, how these doji candles were forming at that point, you can see the last, I would say 3 candles right over here, there were doji candles. And I don't use doji candles to determine, okay, this is where price action might go. I use the mathematical logical reasoning behind a doji candle. What causes a doji candle? What causes it is through signal and noise, right? So the signal being actually price action moving in a general direction, and noise being the specific wicks that you see here. So the signal will be, price actions, the bar itself, and then the noise will be the wicks itself. So you can see that the signal to noise ratio is fairly small, meaning that price action has a high tendency of chopping at that specific level, not moving anywhere at that specific level. Not only do we have divergence, which is, a part of our systems, we also have price action coming off a Fibonacci level, and as well as, there's doji candles forming on the 1 hour chart. So at this point, I know I put my Fibonacci level right over here as well, but I also put it at these 2 points from here. So as price action made this wick toward the upside, I put my Fibonacci point at this kind of lower high wick point, and then putting my, lower low kind of point all the way down here. And you could also see that it was bouncing off those Fibonacci points, right? It was bouncing off the 1 hour 50. It was also bouncing off, that Fibonacci level, right? So looking at that, we saw that, price action had a tendency of not trying to move higher, like it was chopping at that critical point. And, we could see that price action came below the 50 and then comes toward the 200 EMA to eventually come back higher. But it just did not go anywhere. It just failed, which is, why we saw those doji candles, right? So at that point, we saw that, that price action close to the open broke through the 50, and it was breaking below the 200 EMA. And now I like looking at my indicators to kind of see, okay, what exactly is my indicator showing me right over here? And at this point, you can see that the TDI was falling, the MACD was falling into below the 0 line, which is part of our system, if you guys are part of Scalping University. And so at that point, I like that opportunity because we were coming below the 200 EMA, that we had proper MACD and TDI values, and as well as on the market open. I actually caught this trade live on my live stream. I saw that on this specific point. Let me see if I can do the replay tool real quick. So this is right on the market open. So you see this wick right over here. We saw that this wick came all the way back up. So what I did is I actually drew a Fibonacci point at the most kind of recent lower highs. So I could have done it at either way, from this critical point to all the way right over here. So let's just go ahead and delete this real quick. So from this lower high all the way toward this point right over here. So from this lower high toward this lower low point, we saw that this wick came toward that Fibonacci point, which was exactly what I was planning for. I was looking for a good kind of opportunity to get in short because of the higher time frames. Obviously, Dow Jones on the higher time frames is now downtrending and it's bouncing off those significant levels, like I said. And off the market open, usually there's huge volume right there on the market open with orders kind of triggering in from investors and all these other traders coming in, all these futures and stocks, right? So we saw that wick came all the way up toward that Fibonacci point. And as soon as I saw it reject really fast like that, I was so interested in getting in short because I knew that it was just a fake out to fake out some of the buyers, because that's usually what you see in the market open. And from there, I got in short as a collapsing EMA entry once we got in right over here. And you can see there, look at that beautiful bar. Within a matter of minutes, I was out of the trade, right? And that's part of the collapsing EMA system, right? That's originally how I made the system, right? Because I wanted to take more opportunities towards short side where I could find a critical point in the market where it has a high tendency of collapsing, basically, of breaking down. And usually on indices, which is the markets that I trade, the Dow Jones, the Nasdaq 100, the S&P 500, usually on those specific markets, whenever you see sell-offs, it's usually fairly quickly. It sells off fairly quickly and fairly fast. So that's why I was very, I've been trading Dow Jones since last Friday, just shorting it off the market open, seeing really good results from that, because usually whenever markets are failing hard, that specific system makes me a lot of money off the market open, just based on all my rules that I have in place, right? So we could see here from this point right over here, I took that trade and I was out within a matter of minutes. And I'll show you guys my MetaTrader 4 real quick. You can see here where I took this trade short, just like I said, from right over here at this point. And so I took that short right over here, got in here, and then basically, got out right over here for 2 execution hours. So it was a decent sized trade. I could have maybe caught a little bit better if I had a smaller stop loss, giving myself better risk to reward opportunities. But hey, I was cool with the trade. I knew that I could get 1 R toward the 800 EMA, which that's a level that I usually look for to get out because it has a high tendency of bouncing back up, which that's exactly what it did right over here. It exactly bounced off that level. You can see what price action did later on. But, I didn't trade any of this. I just took one trade and, you see how powerful it was from right there. So that's part of my system where literally I can make my 0.5% to 1% within a matter of minutes because of my systems, right? I usually MLS, collapsing EMA, emerging EMA. I like taking trades off the open because usually at that point I'm more profitable. I have a statistically profitable edge at that period of time, and specifically with my systems as well. Not every trade will be a winner, of course, but usually whenever markets are very volatile and we're seeing a lot of fear from investors, usually off that market open failure, once we see a push back up toward a specific level, most of the time it will come back down. And if you look for specific patterns, you can make a lot of money from that. So from there, I just made about a little bit less than 1% on that trade. And it was, a fairly nice trade going forward with my, collapsing EMA system. But what I want to just basically explain is that, just look at Dow Jones, right? You're seeing, price action respecting that 1 hour 50 very beautifully. And I would have expected a bounce back up toward the 4 hour 50 EMA, but we didn't see that. So we could expect, more continuation toward the downside. I'm very pessimistic about this. Now I did count on a bounce coming into the close for today. And the reason why is because whenever you see such big failure like this, most of the time you're going to see it bounce. And so right now I'm actually on a trade right now on the Nasdaq 100 on a long. You can see here, let me show you guys my Nasdaq 100 trade. You can see here I was long right over here off the market open. Off the market close, because I knew that we would most likely see a high tendency on bouncing. So you can see here, I got long at that bottom right there. There is divergence. Let me go ahead and go to the Nasdaq 100 real quick. So, decent size of amount of a bounce, I would say. At this point right now, you can see there's divergence here. Our price action is falling. TDI is rising. I think I'm up about, I would say, around 100 points, which is quite decent. And I knew that since we saw such a big failure toward the downside, we would see a good size bounce back up. And those are just patterns that you literally see every single day. Like, I've been trading these instruments for such a long time that I know that coming into the close, usually what you'll see coming into the next turnover of the day, you'll see a nice size bounce on pre-market sessions. So I'm actually expecting the Nasdaq 100 to come above toward that 15-minute 50 EMA, which is also a mean reversion kind of type of a deal. So I'm actually expecting it to go there, and I'm probably going to get out at that point. Looking at the higher time frames in the Nasdaq 100, we're bouncing off that, not quite off that daily, but fairly close toward that daily 50 EMA right there. Coming into the 1 hour chart, actually the 4 hour chart, you can see how price action, was coming down. Now we saw a good size, decent bounce right there as well. So like I said, again, I am expecting to get out off that 50 EMA, that mean reversion, because that's usually a good play for me to get out. And then if I do want to decide to keep a piece in, then I'm probably going to wait toward it to go toward the 1 hour 50. Now, I don't see it actually coming above the 1 hour 50. I think that's very low probable, comparing to see what we see in the last couple of days with this huge market action. We saw the Nasdaq was down 2% today, so that was very insane. So I would expect that later on the session into tomorrow morning, because it is 9 p.m. right now, that we would see more of a continuation of a drop on the higher time frames, which gets me really excited, because I know that as we're coming toward those levels, I can take really aggressive shorts, risking maybe even 1% to even sometimes 2% if I'm, if I have a huge enough of a buffer size in my trading accounts. And you can make a lot of money, right? You can make a lot of money fairly quickly. If you guys were with me in September of this year, you guys would see in my group chat that I'll be taking so many trades every single day, and just making huge amounts of money by those specific price action patterns, by my systems that I trade every single day. So yeah, that's pretty much it. Usually whenever markets are choppy, I try to just stick to 1 or 2 trades a day off the market open, making maybe 0.25% of a risk to making 0.5%, or risking 0.5% to make 1%. And if I take a loser, then that's fine, because I know that usually in the long run, if I take trades off the market open, I'm still profitable based on my market systems and statistics and my my systems edge. But yeah, that's pretty much it. Coming into basically the pre-market session, close to the pre-market session of the Nasdaq 100 and also the Dow 30, I'm expecting hopefully a bigger drop coming into Thursday. And then Friday will be actually a wild card to see exactly where we might kind of head to. If we see like a close on Friday coming below all the new weekly lows or whatever, then I would 100% expect for possibly seeing a very decent sized correction, at least minimum 10%. And if it goes below 10%, then we might see a market crash, which that'll be so exciting, because that's better deals for all of us. We can get in better deals for stocks, and the volatility will continue, and we could just basically make a crap ton of money off that. So let me know if you guys have any questions. That's pretty much it for this video. And if you guys are wanting to trade my systems that I trade every single day, which now my course Bona has 3 systems: my collapsing EMA, emerging EMA, the MLS system, the MLS swing system, all 3 of those systems in one bundle. And I'm not even like trying to oversell or upsell anyone. I think that's a very good deal, and I put so much work into my systems because there's proven statistics on those specific systems. So if you guys have any questions, please let me know. Check out the link in the description for Scalping University, and I'll see you guys in the next video.